Hi, I'm Lerma Manyalak. I'm here to report money laundering.
What is money laundering? Money laundering is the illegal process of making large amounts of money generated by a criminal activity such as drug trafficking or terrorist funding appear to have come from a legitimate source. The money from criminal activity is considered dirty, and the process launders it to make it look clean. Money laundering is a serious financial crime that is employed by white-collar and street-level criminals alike. Most financial companies have anti-money laundering policies in place to detect and prevent this activity. Money laundering is the illegal process of making dirty money appear legitimate instead of ill-gotten. Criminals use a wide variety of money laundering techniques to make illegally obtained funds appear clean. Online banking and cryptocurrencies have made it easier for the criminals to transfer and withdraw money without detection. The prevention of money laundering has become an international effort and now includes terrorist funding among its targets. How money laundering works. Money laundering is essential for criminal organizations that wish to use illegally obtained money effectively. Dealing in a large amounts of illegal cash is inefficient and dangerous. Criminals need a way to deposit the money in legitimate financial institutions, yet they can only do so if it appears to come from legitimate sources. There are many ways to launder money, from simple to the very complex. One of the most common techniques is to use a legitimate cash-based business owned by a criminal organization. Like for example, if the organization owns a restaurant, it might inflate the daily cash receipt to funnel illegal cash through the restaurant into the restaurant's bank account. After that, the funds can be withdrawn as needed. This type of businesses are often referred to as fronts. Money laundering, the three-stage process. The placement, the layering, and the integration stage. The placement stage. The placement stage represents the initial entry of the dirty cash or proceeds of crime into the financial system. Generally, this stage serves two purposes. It relieves the criminal of holding and guarding large amounts of bulky of cash, and it places the money into the legitimate financial system. It is during the placement stage that money launderers are the most vulnerable to being caught. This is due to the fact that placing large amounts of money into the legitimate financial system may raise suspicions of officials. The placement of the proceeds of crime can be done in a number of ways. Like for example, a cash could be packed into a suitcase and is smuggled to a country. Or the launderer could use smurfs to defeat reporting thresholds laws and avoid suspicion. The smurf is the act of breaking down a transaction into smaller transactions to avoid regulatory requirements or an investigation by the authorities. Some other common methods include loan repayment, repayment of loans or credit cards with illegal proceeds. Gambling, purchase of gambling chips or placing bets on sporting events. Currency smuggling. The physical movement of illegal currency or monetary instruments over the border. Currency exchange, purchasing foreign money with illegal funds through foreign currency exchanges. Blending funds, using a legitimate cash-focus-based business to commingle dirty funds with the day's legitimate sales receipt. This environment has resulted in situations where officials in these jurisdictions are either unwilling due to regulations or refuse to cooperate in requests for assistance during international money laundering investigations. To combat this and other international impediments to effective money laundering investigations, many like-minded countries have met to develop, coordinate, and share model legislation, multilateral agreements, trends and intelligence, and other information. Like for example, such international watchdogs as the Financial Action Task Force evolved out of this conversation. We will discuss more about it later on. The layering stage. After the placement stage comes the layering stage, sometimes referred to as structuring. The layering stage is the most complex and often entails the international movement of the funds. The primary purpose of this stage is to separate the illicit money from its source. This is done by the sophisticated layering of financial transactions that obscure the other trail and sever the link with the original crime. During this stage, for example, the money launderers may begin by moving funds electronically from one country to another, then divide them into investment placed in advanced financial options or overseas markets, constantly moving them to elude detection, each time exploiting loopholes or discrepancy in legislation and taking advantage of delays in judicial or police cooperations. The integration stage. The final stage of the money laundering process is termed as integration stage. It is at the integration stage where the money is returned to the criminal from what seem to be legitimate sources. Having been placed initially as cash and layered through a number of financial transactions, the criminal proceeds are now fully integrated into the financial system and can be used for any purpose. There are many different ways in which the laundered money can be integrated back with the criminal. However, the major objective at this stage is to reunite the money with the criminal in a manner that does not draw attention and appears to result from a legitimate source. For example, the purchases of properties, artworks, jewelries, or high-end automobiles are common ways for the launderer to enjoy their illegal profits without necessarily drawing attention to themselves. Money laundering techniques and methods. Money laundering can take several forms, although most methodology can be categorized into one of few types. These include bank methods, smurfing, which is also known as loan structuring, currency exchanges, and double invoicing. Structuring, often known as the smurfing, is a method of placement whereby cash is broken into smaller deposits of money used to defeat suspicion of money laundering and to avoid anti-money laundering reporting requirements. A subcomponent of this is to use smaller amounts of cash to purchase bearer instruments such as money orders and then ultimately deposit those again in a small amount. Bulk cash smuggling. This involves physically smuggling cash to another jurisdiction and depositing it in a financial institution, such as an offshore bank that offers greater bank secrecy or less rigorous money laundering enforcement. Cash-intensive businesses. In this method, a business typically expected to receive a large portion of its revenue as cash uses its accounts to deposit criminally derived cash. Such enterprises often operate openly and in doing so generate cash revenue from incidental legitimate business in addition to the illicit cash. In such cases, the business will usually claim all cash received as a legitimate earnings. Service businesses are best suited to this method. As such, enterprises have a little or no variable cost and or a large ratio between revenue and variable costs, which makes it difficult to detect discrepancies between revenues and costs. Some examples of this are parking structures, strip clubs, tanning salons, car washes, arcades, bars, restaurants, and casinos. Trade-based laundering. This method is one of the newest and most complex forms of money laundering. This involves under or overvaluing invoices to disguise the movement of money. For example, the art market has been accused of being an ideal vehicle for money laundering due to several unique aspects of art, such as the subjective value of artworks as well as the secrecy of auction houses about the identity of the buyer and the seller. Shell companies and trusts. Trusts and shell companies disguise the true owners of money. Trusts and corporate vehicles, depending on the jurisdiction, did not disclose their true owner. Sometimes referred to by the slang term rat hole, though that term usually refers to a person acting as the fictitious owner rather than the business entity. Round tripping. Here, money is deposited in a controlled foreign corporation offshore, preferably in a tax haven where minimal records are kept, and then shipped back as a foreign direct investment exempt from taxation. A variant on this is to transfer money to a law firm or similar organization as funds on account of fees, then to cancel the retainer, and then when the money is remitted, it represents the sum received from the lawyers as a legacy under a will or proceeds of litigation. Bank capture. In this case, money launderers or criminals buy a controlling interest in a bank, preferably in a jurisdiction with weak money laundering controls, and then move money through the bank without scrutiny. Casinos. In this method, an individual walks into a casino and buys chips with illicit cash. The individual will then play for a relatively short time. And then, when the person cashes in the chips, they will expect to take payment in a check or at least get a receipt so then they can claim the proceeds as gambling winnings. Other gambling. Money is spent on gambling, preferably on high-odds games. One way to minimize risk with this method is to bet on every possible outcome of some event that has many possible outcomes. So no outcomes have short odds and the bettor will lose only the vigorish and will have one or more winning bets that can be shown as the source of money. The losing bets will remain hidden. Black salaries. A company may have unregistered employees without written contracts and pay them cash salaries. Dirty money might be used to pay them. Tax amnesties. For examples are those that legalize unreported assets and cash in tax havens. Transaction laundering. When a merchant unknowingly processes illicit credit card transactions for another business. It is a growing problem and recognized as distinct from traditional money laundering in using the payments ecosystem to hide that the transaction even occurred. Like for example, the use of fake front websites. This is also known as the undisclosed aggregation or factoring. Electronic money laundering. The internet has put a new spin on the old crime. The rise of online banking institutions, anonymous online payment services, and peer-to-peer transfers with mobile phones have made detecting the illegal transfer of money even more difficult. Moreover, the use of proxy servers and anonymizing software makes the third component of money laundering integration almost impossible to detect. Money can be transferred or withdrawn, leaving a little or no trace of an IP address. Money can also be laundered through online auctions and sales, gambling websites, and virtual gaming sites, where ill-gotten money is converted into gaming currency and then back into real usable and untraceable clean money. The newest frontier of the money laundering involves cryptocurrencies such as the Bitcoin. While not anonymous, they are increasingly being used in blackmail schemes, the drug trade, and other criminal activities due to their relative anonymity compared with more conventional forms of currency. The effects of money laundering on the economy. The effects of money laundering are severe and extensive. It can create global and local impacts for businesses, economies, and societies. The negative effects of money laundering on the economy are quite numerous. Money laundering damages financial sector institutions that are critical for economic growth, promoting crime and corruption that is slow economic growth, reducing efficiency in the real sector of the economy. The majority of global research focuses on two major money laundering sectors: the drug trafficking and terrorist organizations. The effect of successful clearing drug money is obvious: more drugs, more crime, and more violence. The link between money laundering and terrorism can be a bit more complicated. For an obvious example, terrorists are knocking down money so that authorities cannot monitor them and prevent their planned attacks. Money laundering is a problem not only in the world's major financial markets and sea centers, but also in emerging markets. As emerging markets open up their economies and financial sectors, they are becoming increasingly appropriate targets for money laundering activities. Money laundering creates unpredictable changes in money demand, as well as causing large fluctuations in international capital flows and exchange rates. The decrease in government revenues. Money laundering is a global phenomenon that undermines the economic and political stability of states. As it becomes difficult for the government to generate income from the related transactions, which are frequent in the informal economy, it decreases tax revenues, which causes a serious negative impact on the economy. Socioeconomic costs. The socioeconomic effects of money laundering are diverse because dirty money from criminal activities flows into legitimate funds. They are used to expand existing crime transactions and finance new ones. Also, money laundering can lead to transfer of economic power from the market, the government, and citizens to criminals, thereby eliminating crimes and corruptions. Preventing money laundering. Governments around the world have stepped up their efforts to combat money laundering in recent decades, with regulations that require financial institutions to put systems in place to detect and report suspicious activity. The amount of money involved is substantial. According to the United Nations Office on Drugs and Crime, global money laundering transactions account for roughly $800 billion to $2 trillion annually, or some 2% to 5% of global gross domestic product. In 1989, the Group of Seven formed an international committee called the Financial Action Task Force, in an attempt to fight money laundering on an international scale. In the early 2000s, its scope was expanded to combating the financing of terrorism. The United States passed the Banking Secrecy Act in 1970, requiring financial institutions to report certain transactions to the Department of the Treasury, such as cash transactions above $10,000 or any others they deem suspicious on a suspicious activity report. The information the banks provide to the Treasury Department is used by the Financial Crime Enforcement Network, which can share it with the domestic criminal investigators, international bodies, or foreign financial intelligence units. While these laws were helpful in tracking criminal activity, money laundering itself was not made illegal in the United States until 1986, with the passage of the Money Laundering Control Act. Shortly after the 9/11 terrorist attacks, the USA Patriot Act expanded money laundering efforts by allowing investigative tools designed for organized crime and drug trafficking prevention to be used in terrorist investigations. Anti-money laundering in the Philippines was established to prevent money laundering. The country created an Anti-Money Laundering Council to ensure that Anti-Money Laundering Act is being observed by those within the financial industry. The Anti-Money Laundering Act was enacted in 2001 and designed to ensure that the country will not be used as a money laundering site for the proceeds of any unlawful activity. It covers institutions such as bank, financial institutions, supervised or regulated by the BSP, insurance companies, and those supervised by the Insurance Commission, securities and brokers, and those supervised by the Securities and Exchange Commission. The law also ensures that the country will cooperate with other countries, with the United Nations, and other international bodies for investigation of money laundering offenses or even cases when laundered money is used for financing terrorism. The covered transaction is usually a single or combination of transactions that will total in the amount of 4 million pesos or the equivalent amount in foreign currency. What is the money laundering offense? This is when the money that comes from an unlawful activity is transacted and subsequently make disappear as if it comes from legitimate sources. Who will be held liable is any person who has knowledge of such activity and failed to disclose it to the AMLAC. In 2016, the bank RCBC was involved in a very complicated series of events that led to money being laundered from Bangladesh into the Philippines through one of its branches. In 2017, the AMLAC reported that around 10.2 billion pesos worth of funds were laundered to the Philippines from 2015 to 2017. In 2018, tighter rules were implemented to make sure that the anti-money laundering law has more funds. Like for example, according to the AMLAC Resolution number 107, covered institution must report suspicious transactions in 10 days upon discovery of the said transaction. In the another amendment, firms must submit KYC documents to accompany suspicious transaction reports. Among the information that must be submitted include signatures, photos, and pictures of government IDs. In 2019, it is reported that the AMLAC is seeking more powers beyond its current capability, specifically since the Department of Finance is pushing for the lifting of the bank secrecy law. The AMLAC thinks it will make them better because if the restrictions are lifted, they will be able to scrutinize accounts better. As mentioned, the AMLAC only gets reports if the amount reaches a certain threshold. Initially, what's expected is for the AMLAC to be given the mandate to become the transition in uncovering financial crimes. In short, this initiative will help the AMLAC and the country for a more efficient prosecution of the money laundering acts. And as of April 2018, the AMLAC has secured more than 90 convictions for money laundering offense. The Anti-Money Laundering Philippines and the Bitcoin apps in the country. Coins.ph, Bitbit.cash, and every Bitcoin site in the Philippines implement KYC or the Know Your Customer in accordance to anti-money laundering. Adherence to anti-money laundering law and Know Your Customer laws is also the reason why blockchain and crypto wallet apps, particularly those whose business are mainly in the Philippines, require multiple stages of verification. Let's take coins.ph as an example. In its first limit, which is the level 1, you can cash in up to 2,000 pesos, but you cannot cash it out. The next one is the level 2 users. You can cash in and cash out up to 50,000 pesos monthly, but this requires at least 3 verifications, which is phone verification, identity verification, and selfie verification. The other one is the level 3 user. You can cash in up to 400,000 monthly with unlimited cash out, but you will need to verify here is your address. So, because of the anti-money laundering, Coins.ph and other institutions supervised by the Bangko Sentral ng Pilipinas must report to the AMLAC any funds transfers that amount to 500,000 pesos in a day. It must also report any transaction that appears suspicious. Like for example, if a customer is regularly depositing 100,000 pesos a month and suddenly deposited 1 million pesos today, that will report it as suspicious. Well, this is just an example. What does this mean? The anti-money laundering is the reason why we have to submit documents such as government ID, utility bills, credit card bills, and others in order to get verified in coins.ph. If you remember, sites like Coins and Buy Bitcoin have verification levels. You can transact up to a certain pesos only depending on the document and identification you submit. For example, at coins.ph, you can only cash in up to 50,000 a month, but a level 3 account allows you to transact up to 400,000 pesos. So, money laundering happens when dirty money enters a legitimate financial institution to make it look clean and legal. Anti-Money Laundering Act discourages money launderers to enter the Philippines. With the Anti-Money Laundering and Know Your Customer included in Bitbit.cash and Coins.ph, this restricts the users from doing transactions unless verified. Although it breaks the whole anonymity of using Bitcoin and other cryptocurrencies, Bangko Sentral ng Pilipinas just want to make sure that the growing industry will not be an instrument in funding terrorism and other illegal transactions in the country. Once again, I'm Lormo Manyalak. Thank you for watching and listening.